What's going on, everybody? Thank you so much for checking in. In this video, we're going to talk about SPY, which is the S&P 500 ETF, and we're also going to cover some other notable names on the market, such as QQQ, Apple, NVDA, Tesla, and AMD. So let's go ahead and get started by first talking about SPY, and before we jump into the micro charts, we're going to talk about it on the macro charts, specifically the weekly candles, where we can see that SPY this week made it back above its 10-day moving average, and the significance of this line comes from the fact that every time we have broken above it or below it, the market tends to continue that rally or that trend for the next weeks or for the next months to follow. Here's a perfect example of when we broke back above this line in March of 2023. We broke back above it when SPY was trading around 400, and by the time that we broke back below it, it was around 442. And so if you got in and you simply just held your trade until it broke back below this level, you would have made about 10% just holding SPY shares. Now that we're back above this level, the next thing we want to watch for is volume. Are buyers really interested above this level, or could this be a fake out and we move back down? Here in this case, we are seeing that volume has been decreasing week over week on SPY, but just keep in mind that it is only Wednesday and SPY still has 2 days to make up for some lost volume this week. So through Friday, we are watching for the weekly candles volume to catch up to at least last week's volume in order for us to determine if this move is going to be sustained or if volume is too weak for it to be sustained and the market could use a pullback. So now we've talked about SPY on the weekly candles, let's talk about it on the daily candles, where we can see that SPY is moving off of a very strong gap up, and this gap up was accredited to the fact that inflation ticked down from 3.7 to 3.2% between September and October. So obviously inflation has been the biggest battle for markets over the last 2 years. The Federal Reserve has been raising rates in order to battle inflation, and now that it is coming down to the Federal Reserve's 2% target, it could mean that rate hikes are no longer necessary, and the market is obviously happy about that. So zooming in even closer, let's talk about SPY, and let's do so on the hourly candles. And we can see that SPY is strongly bullish, however, it is strongly stretched to the top side. So we do want to see some consolidation, but right now we do believe that the market still has more upside room strictly based on momentum. There is a ton of momentum, and right now we're getting into the FOMO phase, which is the fear of missing out. A lot of traders are jumping into the market trying to buy this top, and they're going to try to push markets higher. So we do expect SPY over the next few weeks to test the 453.65 level for a further breakout towards its all-time highs. Now the next stock on our watches is going to be QQQ, and QQQ is nearing its 52-week highs. Many tech stocks have already hit 52-week highs, and QQQ is obviously the tech index, and so it follows. If you are watching QQQ, here are some levels to watch for. We are very bullish on QQQ as long as it holds the 375 support. So even if it pulls back and fills this gap back down, we are still bullish as long as it holds that 375 mark. But obviously, we would like to see it hold the gap lows of 383 in order for us to hold our calls or hold a full position. Now above 388, if QQQ can break out, that is going to be a very strong breakout because there's not much support until about 402. And so if QQQ is moving higher, it obviously means that SPY and the rest of the tech sector is going to be moving higher because tech pretty much controls the entire market. Now the next stock on our watches is going to be Apple. Apple, like SPY, is back above all of its healthy moving averages. You can see that as soon as Apple moved back above its 200-day moving average, it continued that rally higher, and it got rejected just below that 190 mark. If you have been watching our videos, you know that that 190 mark has been one of the strongest resistance points that we have been watching, and that's because of this rejection right here. You can see the sheer force of this rejection as soon as Apple hit that 190 mark. And so obviously it's going to take a little bit of a battle for buyers to get it back above 190 and fully gain confidence above that level. But once it is above 190, then it has a very good chance of moving towards its all-time highs and retesting that 198 level. Now 198 is a very optimistic price target, so we will be updating it between now and a few weeks to see if Apple is indeed moving towards that target. To the downside, Apple has supports around 186.30 and 183.50. we wouldn't turn bearish on Apple unless it moves back below 180, 150. That's when we would consider shorting or playing a put on the stock. Overall, right now, we are not trading puts, especially on tech stocks. We are trading puts on energy stocks and oil companies. However, the tech sector is just simply too strong to trade puts on. When we do trade puts on it, we stick to day trades. We do not swing those puts because overnight right now, the market is fully dominated by the bulls. The next stock on our watch list is going to be NVDA. NVDA is one of the strongest stocks on the market. Betting against this stock is very, very risky right now. You can see that it is very close towards its all-time highs. And if you haven't seen it yet, our video projections on NVIDIA specifically is going to be posted in our description. We are expecting the stock to go towards 1,000. And we have seen this movie before. We saw it with Tesla. And so we are expecting the stock to split as well. So again, if you haven't seen our video, we'll leave it in the description. NVIDIA on the shorter term charts has a resistance around 501.90. It needs to move above that level to move towards a price target of around 507 to 508. It has a support around 481, but we wouldn't turn bearish on it in the short term until it breaks below 465. That's when we would consider playing a put back down. Now remember, you guys, these are the micro charts. On the macro charts, we will remain bullish on all these stocks as long as they're holding the 10 and the 20-day moving averages on the daily chart, because you can see that as soon as a stock moves above those levels, buyers are quick to buy it, and usually the trend doesn't reverse until it moves below those levels. And so even though we may short a stock or play puts because it broke a price point support, our eyes are always on the daily chart when it comes to swings. Usually we do not take put swings on any stock trading above its 10 or 20-day moving averages or any of the other strong moving averages. The next stock on our watch list is going to be Tesla, which, like SPY, showed this gap up on the CPI news. However, Tesla is right now testing that 100-day moving average. So it has made it back above all of its other moving averages. But on the daily chart, if you are a buyer or a seller of Tesla, you want to see where it opens in relation to that 100-day moving average. The moment it opens back above it, there's a good chance that buyers are going to take control of Tesla once again and continue that move higher. Here are some shorter term charts to pay attention to on Tesla. First of all, you have a resistance around 249.30, which is going to be right around that 100-day moving average. A move above that point on Tesla has a price target of around 257 to 258. And the second price target would be around 268 to 269. These are very aggressive price targets, so make sure you're checking back in our next video so we can update them for you. Now to the downside, we will remain bullish on Tesla unless it breaks below 226.30. That's when we would consider playing a put or shorting the stock. The last and final stock on our watch list is going to be AMD, which is also one of the strongest names on the market. In fact, we actually traded AMD in our Hyper Wealth group recently and we exited it. We exited at 25% of our position. Our entry was around 107 to 108 and our first price target was around 124 to 125. We already closed 25% of our position right around 121. But as far as the chart goes, overall, we are still very bullish on AMD, especially because it's above all of its healthy moving averages and it has very strong volume accompanied with it. If you are watching AMD on the shorter term charts, here are some levels to pay attention to. AMD has a resistance at 122.11. That comes from its most recent rejection, so it needs to break above that level in order for it to continue its rally towards the next price target of around 125. To the downside, it has a support of around 116 and a support just below that around 112. And this support comes from the breakout above these three rejections here. So obviously, if AMD moves below that level, it means sellers are back in control and it is likely going to fall towards 107. But we are still very bullish on this stock for now. We will be updating AMD and all the other charts that we talked about through the next video. So make sure you're checking back in. Thank you guys so much for checking in and have yourself a great day.